Stay with us.
Yeah, a technical strategist with Invest Securities. Thanks very much for joining us here this morning. And the S&P 500 hit another intraday high despite first quarter growth contracting by 1%. Do you expect the next couple of quarters to be a lot stronger?
Well, we do see a potential increase, in the index prices in the next few days. Talking about quarters, I think it's a little bit too far-fetched at this point in time, because you have to keep in mind that right now the market is in uncharted territory. We are creating new highs here, and to be honest, it's more sentiment-driven at this point in time. People are just betting more on the labor market at this point in time. So, do we see a higher movement in S&P 500? Yes, I think a potential toward 2,000 is very likely. Dow 17,000, but for it to continue more than that, I think we are going to be seeing a little bit of a correction in the market very soon.
So you think people are tired of this bull run now?
Well, I don't think it's more a tired bull run at this point in time. I think it's a little bit more of a cautious bull run. So, we're likely going to be looking for a retracement to happen very, very shortly, maybe about 5%, but I don't think it's going to be more than 5% correction this time around. It'll just be a short while. The upturn is still very strong.
Sydney's been held in a very tight range recently. Are investors there concerned about a slowdown in China?
Well, China's slowdown is always going to be a concern for the Australian market here, but we also have to look at the other sectors as well. The banking sectors right now, they're gaining a little bit more. So that kind of give it a little bit of a balance. That's where you see that push and pull within that range there. But in terms of the concern in China, yes, it'll still be a concern, but probably not as much as a few months back.
Now, we've been keeping a close eye on iron ore prices, and they've dipped to a 20-month low below $100 per ton. Any reason to be optimistic about prices rising now a little bit?
Okay. This is probably more from a technical point of view, but we have to remember that we still have that 2012 low, and that is likely going to be creating a little bit of support. To top that off, we are also severely oversold, and a lot of investors are likely going to be pulling out, likely going to be buying at these low prices here, very close to that 2012 support. So if that's a little bit of a good sign, yes, we're likely going to be seeing a little bit of a pullback. But is it going to go back up above 100 at this point in time? That's a little bit too hard to tell. I think the momentum is still to the downside for iron ores.
And in this kind of environment, are high yield plays like banks and telecommunication companies coming back into play in the market?
Yes, especially in the Australian market. Our top four banks here, the share prices are pretty much at record high levels, and Telstra, the largest telecom here, is also very close to its previous highest level here. And these stocks are currently benefiting more from the monetary and policy changes in Australia right now, especially the banking sector, especially with the RBA not planning to rise interest rate until next year. We will have a little bit more stability in these banking sectors.
Also wanted to ask you about gold. Gold's extended losses for a third straight session, hitting a 16-week low. Is the metal likely to face further headwinds in this sort of improving economic environment?
Yes, we do expect more drop to the downside. Currently, we are going to be looking at about 12,000 as a potential drop. We might even return towards the 1180 mark previously, but the momentum is still strong to the downside, and we still expect further drops for gold as the economy globally kind of stabilizes at this point in time.
All right. Well, thank you very much indeed for that. Vito Henjoto of Invest Securities in Sydney there. In other news, experts